Hello traders, welcome back to the channel. So we are back with another video. Today is a Sunday, 29th of June 2025. It is around 6 p.m. and I thought I could do this video. So in this video I'm going to be teaching you about one setup that you can use to get pips out of the market every day on any pair for as long as it respects price action. Yeah, so I'm going to be taking you through that setup, and it is simple and precise for as long as you follow the steps that are required in order to meet its standards. Okay, so that being said, I don't want this video to be long. However, we are going to do it first. So you will first subscribe as usual, and then we shall proceed. We are on the road to 300 subscribers. So far we are 250. We started last week with around 200. So 50 have joined the community. So if you have not subscribed, subscribe, and then we proceed to the video. Road to 250 to 300 subscribers. So 5 seconds you subscribe, then we proceed. Okay, so now I'll take you through the setup first, how it looks like. There are two, but I think I'll give you both of them. And most of these setups always appear every day on each and every time frame. However, if you want the frequency of trading to be high, and if you want to take many trades in a day, that means you're going to consider the lower time frames from the 4-hour down to the minutes time frame. But I don't consider minute time frame because those setups are not strong enough on the minutes time frame. They're always strong starting from, I think, 15 minutes and going up, but they work on all time frames. You just have to be cautious. So first things first, these setups are simple. You do not have to do a lot of analysis, and I'm going to show you how simple they can be, and they're very effective. However, you have to use them with proper risk management, just like other strategies. So the first thing, people trade demand and supply, you know them. The first setup is rally, base, then rally. What does this mean? It simply means that price was going up and made a base, then made a huge move to the upside. So how do we trade this setup? We wait for price to come back to this area where we shall have a demand zone, pick the orders and take them to the upside. And where is the target? Your target is always going to be the previous high. That is the first target, and then maybe you can hold more to get more pips out of, to do more from the move. That is one. And then the second one is this one here. And if you have been on my channel for long, you know that I've taught about this, like that. No, not this one. It goes like this, and I'm going to be showing this on the charts, don't worry. So like this, then price crosses and then forms a base here and then goes up like this. So how do we enter here? We wait for price to come to the demand zone around here, and then we take to the next high and probably beyond. So this is simply like that. So price goes up, makes a resistance, comes back, breaks the resistance stands into support. After price uses this resistance support and goes up, when it goes up, it leaves a demand zone here. So when price comes back here to retest or pick the orders on demand zone, we take it up, and I use this setup for full margin. Someone taught me this setup. I also picked it and now I use it for full margin, something like that. Yes, like that. If you have seen it somewhere on the chart, don't worry, we shall go to the charts and then you'll be seeing them. I'm going to be cherry picking them, so you'll be seeing a lot of examples of this kind of setup. You can use these setups every day. With these setups, all you need to do is go to the charts, identify the setup. If it looks like what you know, then look for the direction of the market. If the direction of the market is heading your way, then that setup is safe, you can take it. Very simple like that. However, that means that you don't have to go to the market and do the whole top-down analysis that we always do for the weekly. What you do is to go in the chart and look for setups. The moment you see the setup, that is your green light to go. So you see the setup, then you open the chart, you start looking for the direction of the market. For example, if you find a setup like this one, let's say, so now this is the setup like this. Price comes back to retest and then breaks up, comes back here like this, and then comes up there. So now, for example, you open the charts and then you see this price came, tested, came down, broke, used this as support, and then went up. When you see something like this on the chart, first thing you want to do, identify, do we have a demand zone around this area? Yes, it is there. Now the second thing is you want to know where the direction of the market is heading. The moment you ascertain that the market is in a bullish or it is an uptrend making higher highs and higher lows, then you want to put your buy orders here. Stop loss slightly below, and then the target should be this high here. That is a 1:5. So when price comes, this is what is most likely to happen. Like this, price will come here, pick your orders and take them to the previous high, and then like that you've hit your target. Sometimes price can proceed beyond, so it will be upon you and your psychology how long can you hold the trades and keep those profits. Same thing with here. Price comes, makes a rally, bases, and then goes up. So when you come to the chart, you want to come and ascertain if you have a demand zone around this area. If you have it, mark it, and then number two, look for the trend of the market. What is the trend? Is it in an uptrend? Yes, it is an uptrend. Good. So you put your buy limits here and then wait for price action to come and pick your orders and take them to the sky. So now let's go to the charts. Let us go to the charts and see what I've been talking about. Delete this. Let me just delete this quickly. Go to the charts. Okay, so we are on the chart and this is gold. This is the, let me start with the 4 hour because most of us use 4 hour. This is the 4 hour time frame. So what I'm going to do, I'm just going to start from way back like here, and then we see how many trades we would have picked from this area. So we have one here, this is a high, a low, a higher high, higher low, and then higher high. So this is rally, base, rally. This one looks like this. The first one I drew, if you're following, this is rally, then base, then rally. If you followed the other first setup, this is how that is how it was looking. And then we leave a demand zone here, which we have here. Now if you want to see this well, go to line chart. You see the line chart. What I do here, rally, base, rally, is what is here. Rally, base, rally. If you always go to the line chart to see that clearly. Then you come back to your candlesticks to see if you have a demand zone. So do we have a demand zone here? Yes, we have a demand zone here. Let me just take these two candles. Demand zone there, so you mark it like that. Mark it like that. Okay, and guys, it is the same thing for sales. The two examples I shown you are for buys. If you want to sell, they are the same thing. So this one, which is rally, best rally, just flip the chart like this, and then it is going to be, where is it? It's going to be drop, base, drop. Same thing, you see, drop, base, drop. So when there's a supply zone here, when price comes back here, it is going to be going down. You just same thing, just invert rally base to base, drop base drop. So now after marking here, you're going to enter your buy limits there and put a stop loss slightly below the low of this demand zone. So what is your target? Your target is going to be the high. However, in this case, you needed to apply trade management. Why? Because price came, let me show you, price came, tapped in this and reacted over, I think, 100 pips. Let me see. Price came, tapped in, and then reacted over 500 pips to the upside. So price tapped in and reacted over 500 pips. So you had to remove your trades from there, or you did proper trade management. So this one gave you 1:1. So after 1:1, if you had moved your stop losses, price would come back, but it would not take you out, at least not without something. So that is one. So we go to another one. Go to another one. Just like I told you, what you do, you come to the charts, start monitoring and see whether you can get those setups, and make sure the setup has to be as clean as it can be. So now we have not seen any setup. We saw one here and we have not seen any up to around here. So someone will be saying, oh, but now how long will it take us to trade? That's where you have multiple pairs on your charts, because what you're doing is you're not analyzing each and every pair and following it. You're cherry picking setups that have already been formed and then looking for the direction of the market. If you pick a setup and it is in favor of the direction, just take it. Okay, so now so far we've got one on gold. I'm going to show you on different pairs. Here I think this one was missed. It was missed there. I'm going to show you in different pairs. Let me see. Here there is no any. We have one here. We have one. This is one that I took even. We have one here. There's a demand zone here. Look at the beautiful move away, break of structure. So now this is rally, base, rally. Yes, it is not going to always be perfect the way you see it picture perfect, but as long as you see it looks like, then you put your buy orders here and then target the previous high. This one was executed perfectly. So you put your orders here, stop loss slightly below, and then target the previous high, which is 900 pips. If you held for long, it would go even up to 1400 pips. That is one. So I think that is all on gold. So remember, this is the 4 hour. If you drop down to the 1 hour, you're even going to get more setups, because the time frame is low. That means you get a lot of candles. So that means on the 1 hour you're going to get more setups. Like for example, there is a setup here. This is rally, base, rally. Rally, base, rally. Look at the huge move away from there. So now you mark the demand zone like that. So what is the direction of the market? Current direction is going down. However, it has broken up here to the upside, so it signals it might move a little bit up before it can go down, or before it continues up, but at least you are sure that it's going to move a little bit up. So you put your orders here and target the previous high. Always target the previous high. Even if it is a 1:2, that is okay. This is 2.7, it is okay. Target the previous high and now that is it. So we look for another one. Let's remove. We're still on the rally based rally, guys. Look for another one. This one here also, there's a reaction, but it was a 1-to-1. This one here, you see, rally base rally. Look at the huge move away, very beautiful. This was a very beautiful move away. So it was supposed to give you a good reaction. So price came reacted for a 1:1. A 1:1 here. 1:2 actually. 1:2. Price reacted 1:2. You get out. However, we would have targeted the upper side here, but trade management would save us. Okay, so we come here. There's a rally base rally, but here you would be stopped out. You would be stopped out here. Here it will be stopped out, but still market will move in your direction unless you used some good stop loss. Where is the other one? This one is a continuation pattern, so it works best in a trending market. This one does not fit. There is this one here, rally base rally, and then you mark your demand zone. You see the move out is good, so you'll wait. The moment you see this, wait until when price comes back, taps you in, and then you target the previous high, which is 1:1. Target the previous high, which is, this is 1:4, 400 pips. 1:4. Okay guys, so I think that is all for gold. Let me go and this one did not work out, but it had a good move away. This one was losing one. Okay, there is this one here. This one was good, rally base rally, but this move away is not good. However, it worked out. Like they always say, you find these zones not working out and the worst zones working out. So let's go to US oil. US oil for our time frame. And guys, you see how I'm cherry picking these things. So US oil for our time frame. What do we see? What do we see? Rally base rally. This indecision candle. Mark it like that. You see, rally base rally. So price came, tapped you in, and then took you up. Target the previous high for 1:2, but you can hold for long. So the next one is a trade that I took. This was rally base rally. It is a trade that I took on US oil like this. You can just extend it up. I know someone will say, oh, no, you're not marking the candle. Don't worry. This trade I refined it to, I think, the 2-hour. That is why I saw that candle was going up there. So let me see the 3-hour. Yeah, it was the 3-hour. You see? Yes, it was going up to there. So come back to the 4-hour to put a proper stop loss. So this is rally base rally. Put your orders here. You see this good move away. There is no one fail to enter that trade. Put your orders there. Stop loss below. Target the previous high, which is 1:2. You can even go beyond. You see guys, that is on. I think let's just do rally base rally, and then on the next video I'll be teaching you about the other one that I use for full margin. So that one is there. So let's go to, there is this one here, but this one is one we missed. It was not that clear. There is another one here, but the area was tested. There is this one here. And guys, on the 4-hour, you're not going to get a lot of trades. You'll have to trade many pairs on the 4-hour because candles take long to form. There's this one here, drop base rally. So you enter and target the previous high for 1:2, 1:3. It depends, but I would advise whenever you reach a 1:2, move out your profits. That is 1:1, 2.5. could hold if up to 1 is to 2, but it was risky. That one was risky, but it worked out. So here you are not tapped in. Rally base rally, price went up, you marked here, you are not tapped in on the return, then price broke even the previous high, which was so unfortunate. Okay, US oil. Let's go to the 1 hour time frame. US oil, you can try on any time frame that you think can help you. Okay, so this one was the one we marked, so we wouldn't want to mark again. Let's come down here. There is this one here, rally base rally. So you mark your demand zone like that, rally base rally. Look at the move. 1 2 3, very good move. There is even a jump here, so you're waiting for price to come back, sit here, and then you take it to the upside. Simple, precise, and straight to the point. Just know those steps, and then you don't have to learn the overly complicated strategies that are going to. There is this one here, but this one was a losing one. If you put a tight stop, you will stop that, and then price went into your direction. Then which one? There is this one here. There is this one here. Very clean, and I know these ones are winning trend. These ones are winning one. Price went all the way to the upside. But your target would be here. 1 is to 2. There, 140 pips. Okay. Let me see if I can get a drop, base drop. Yes, this is drop, base, drop. So you mark this area here, this green candle there, what most of you call order blocks. Mark it well, because sometimes you're going to miss out. Yes, sometimes you're going to miss out, but most of the times when you catch them, they're going to be winning trades. So there, and then you target the previous high for 1 is to 2, but this one, the first candle only took you to 1 is to 2.7, 120 pips. That is a drop based drop. Which one do we go for? See guys, this is what you do. Just keep on beating the whole thing. Look at this one here. This one was good, but it was a 1 is to 1 rally base rally, and then enter from here, target the previous high. This one, however, it went for 1 is to 1.7, 60 pips, and then retraced back. So trade management would have served you there. Then there's this one, rally base rally. Look at the beautiful move away. So you mark here, and with the 1 hour there are always going to be many opportunities. Mark there, wait for price to come and carry your orders, and then we proceed. 1 is to 6. Okay, so let's check on Euro USD. People who are trading majors. Euro USD. So Euro USD, we already had one here. It is playing out. This one here. It is this one, rally base rally. Mark this area here. See, like that. So when price comes, taps you in, and then you go to the upside. In this one, you risk even 13 pips to make 57. That is 1 is to 4. You could have even gone 1 is to 20 if you wanted. There's this one here. on there. Same things. You just have to keep on looking for the setups and then taking them. So we have drop, base, drop. Here, drop, base, drop. This is a clean drop, base, drop. Mark your zone like that, like that. And then set your buy, your sell limits here. Target the previous high, that is 1:3. You could have gone up to 1:5. See? Rally base, rally, this one was okay, but we were not tapped in. Price came and just went through, so that one was losing one. We have another one here, rally base, rally. Mark it. Oh, so one went 1:2. The target was here. It reached there, but had to hold and be patient. 13 pips. Target is 109. This is 1:8. Previous high. Okay. So I think I can touch on GBP USD. GBP USD is always the same. Look at this one. Look at this one. Rally, base, drop, base, rally. Broke this structure here. Price came down. You marked your area very well. Price tapped you in, targeting the previous high. Making pips. 25. That is 1:2. You could go to 1:3. You see, guys, how things are. Then there is this one, rally base drop. You marked this. Wow, guys. Wow. Look at this one here, rally base drop, guys. Look at this one here. Here like this. And then mark. Why are we taking this one? Look at the move away. It engulfed around 8 candles. And now price came after buying here for around 80 pips. You moved out, then price came, you risked 23 and then target the previous low, which is 80, but it could drop further down to 180. So I don't want to make this video long, guys. I don't want to make this video long. So one tip I would give you for this is that if the price takes long to come back to your area, please delete those zones from your charts. This one was also winning trade. Please delete those zones from your charts because we want price to be coming back as soon as possible, not taking ages to come back. So 1:256, we get it and then we are out. So scalpers, these strategies for you. So that is all, guys. That is all, traders. Thank you for your attention and thank you for watching the video. If you got value from the video, kindly like the video, share, and you can also like it. If you have anything, you can share in the comment section and then I'll be able to handle it. Also subscribe to the channel, guys. Subscribe to the channel because I'm giving you premium content, and this is one of those. This is just a setup for you to use for trading. This is not a strategy, it is a setup. Get this setup, you can embed it in your strategy. Just use this one for entries anywhere. 15 minutes, 30 minutes, 45, 1 hour, 2 hours, 4 hours, 3 hours daily. The strategy works properly anywhere, but it works well in trending markets. So that is all, guys. Thank you for watching and have a blessed evening. I'll stop from there, or maybe if I could, but okay, the video is already long, so I wouldn't add other examples. I'll just end from there. Okay. Okay, bye guys.